Hey everyone, just doing a quick sound check here. Sorry for getting started so late. It's hard to live and have a good weekend with all these obligations around, so I'm here. Sound is good. No, that coin is not doing well. That is for sure. Gary, Brad, good to see you. I'm sorry to hear that, Gary. At least you don't live in Australia. Hey everyone, welcome to the Kendall Report. It's Sunday night. Sorry for the late start. Had a hectic weekend, to say the least. Just got a lot of projects going and trying to live at the same time, right? So it was a little hectic, to say the least. So just remember, before we get into tonight, let's make sure you subscribe and like the videos, and let's get into tonight's video here. Interesting week last week, to say the least. S&P down 1.9, Nasdaq down almost 4.5%, Russell down 2.9. What a way to start the week, right? Or the year, as far as that goes. It kind of flashes me back to 2008. The first week we were down about 8%. It was actually maybe the first 10 days. I was trying to remember exactly what the numbers were, but they were pretty ugly as we came into this, like we started this year. We're at a very interesting juncture, and one of the things I'll talk to you about in the technical section tonight is this 3-week trade. We had an outside reversal on the S&P and some of the other markets, so I'll go through that in detail, but as always, I'll try to run you to the how to short Apple video on the channel as well. But let's just talk about a couple things that are before I get into basically my nightly riff that I do. Let's go through the details, and I'll do that last. So we're looking at, we're coming into this week. Probably the big thing is going to be Powell. I titled this video, "Can Powell Save the Market?" basically, right? Can he turn it around? Is there any way to moderate all the stuff that happened? I have to tell you, I think it was a bit of an overreaction to the FOMC minutes that came out. I'll go through some more detail on that in a minute. But I just, there's just a lot of assumptions being made. And we saw the skyrocketing 10-year, all that stuff, which will get covered here in the technicals. But, as we come through this week, that's Tuesday. Wednesday is CPI coming out, expected to be up 0.5. And I believe the core is 0.4. May have those numbers reversed, but we're looking at a possible 6.8 year over year and a 4.9, which is moderating from those big numbers at 9.8 that we saw last month. So they're looking at some moderation there as far as these employment numbers go, the CPI numbers go, and we're really looking. I don't think there's going to be any earth-shocking news out of that. We'll see. On Thursday, we've got claims coming out, 205 expected, continuing 175. Then we have PPI also expected to come in at 0.4 month over month. So we're going to have to consider some of these inflationary numbers. And I've talked about this before, and I'll go into detail when we get into talking about the interest rates tonight. But I really think there's, like I said, a bit of an overreaction going, and I'm not sure that everything that's going on in interest rates is about inflation at the moment. So Friday, we got retail sales coming out, expected up 0.2, industrial production up 0.4. We got capacity utilization expected in at 77.1, and then the U of M, University of Michigan, consumer sentiment expected to come in at 0.68. So the end of the week is going to be very interesting. Also, we have earnings starting this week, pretty light, but Friday is the only day really to talk about. We have all the major banks coming out, JP Morgan, Wells, we've got BlackRock, Citi, and First Republic coming out on Friday. So a couple of days I think to look at is Tuesday, Friday are going to be big deals. There's going to be a lot of action actually, just with the PPI and the CPI, all these numbers coming out. So hopefully we can get a handle on this from a technical standpoint as we go through the week. Just looking at some of my notes here. Let's talk a little bit about last week. We saw, some of these numbers that came in, the unemployment numbers missing pretty big. That was also, I think, somewhat overplayed as well. I just don't see a lot of the negativity we had come in, but there is some technical stuff that is, as you know, I talk about doing reverse fundamentals. So the technicals are going to guide some of that. And I'll go through that type dialogue when we get into technicals so I can relate them all together. So Powell, what's Powell going to say to save the markets on Tuesday. He's going to have to try to moderate some of this expectation. All of a sudden, you've got the lift off. They're looking at March, and then they're also seeing, some normalization of the balance sheet. That's going to be probably the most interesting thing to watch. And if indeed the employment numbers were starting to indicate that there's some softening in the economy, then my note here is I get the Fed's caught. They're caught right in that place where they need to do this stuff for the marketplace to start to bring down these expectations on inflation by backing off, raising rates, start to downsize the balance sheet, all of those things, right at the place where maybe they don't need to do it. So it's going to get interesting. I think they're going to be very committed in making these moves, and we probably won't see any adjustment or panic, or if they find out they're completely wrong, until maybe May or June. We'll have to see how all that plays out. I think the technicals that you'll see here in a few minutes, while there is some downside, there's still quite a bit of support hanging around, and I'll go through that in a few minutes here. The other thing that, as far as Powell goes, like I said, he's going to have to find a way to moderate and try to bring in some perspective on what everything means. I don't know how well he'll do. So Tuesday could be an interesting day, to say the least. One of the things that I will go through here in a minute, I'm interested in how our database is reacting, and I talked a bit about that last week. Unfortunately, I didn't get to do a video for Friday because of all this craziness that I had in my life last week, but I'll try to bring you up to speed here in just a minute. Let's go ahead and start to take a look at some of this stuff here. Now, it's interesting that the weekly database didn't react as much as we thought it might. And we're looking at it dropped down to 29.14. It was around 30%. We had 976 buys and 1,190 sells. So a slight little downtick, not a lot. Basically a rotation going out. And when we get into this level, 29, 27%, the database is basically washed out about as far as it's going to go. I don't really see that the market is going to be, rolling over and maybe a full liquidation yet. We did see quite a bit of sells here on the dailies, but this intermediate was basically a rotation. In fact, on the 1.2 model, there was actually a positive rotation going there, where we saw almost 691 versus 379 buy signals. So that wasn't exactly what we were expecting to see here. But as we look at the daily, so we've been seeing this in the last couple of weeks, where the daily or the short-term database is at 30.61 long, and we're at 29 and change. So they're pretty much mapped out pretty good. We did see a fair amount of selling. We saw 1,845 sells, only 338 buys on the short term. So that suggests that we still have a bit of a negative rotation going. We look at the futures here in a minute. What we saw there was really they were down about 10, 11 handles earlier. Now they've rebounded. The last time I looked before I started the broadcast. But we're really, this is not a disastrous situation yet, but we are in what we call a extreme protection mode from the standpoint of our portfolios and our database. So we're seeing a lot of portfolios in the system are anywhere from 40 to 60% cash. And that's been that way actually for a bit now. Going back into December, we've seen the database washed out down in this 30 percentile range down in the weeklies, and from all of that stuff is it basically is, you know, been in this negative or protective mode. And a lot of everything that I do, this is the way I look at the world. I know I put out a lot of individual, here's what the indexes are going to do and all that, but this is my world here, is how these portfolios are going to perform and all of that stuff. And, you know, we've got protection on. So those of you that are using WaveTech or Portfolio Expert and our institutional clients, they've already got a fair amount of protection against anything that's going to happen. And in the technicals, there, like I said, there is some support around. I'll go through that in a second here, but there's still this rotation database is definitely a protect mode. And there's basically the process that we talk about a lot, and it's actually on the internet. There is advance and protect, and you Google that. Most of those folks are our customers or have been influenced by us over the last couple of decades. And so this is a big element of what I do, is seeing that protection. So I feel pretty comfortable where we lie with our positions and our percent amount of cash being used. So we have a fair amount of cash, and I know cash is trash, but on a short-term basis, cash can neutralize a lot of downside risk, and that is what we've always used it for. And so let's go ahead and take a look at some of these technicals here and get into what I think is likely to happen here. We'll start off with the daily. Yeah, we'll start off with the daily S&P chart. We're trading down to the 40-period moving average. I talked about this number in detail, or a lot of talk about this 4660 number being major support. We're hanging down there pretty good. PPM1, you can see, is accelerating down to a minus 0.2458, which is trend mode down. And what that tells us is that our resistance level overhead, let me bring this up so you can see it, resistance level overhead is going to be a couple levels here. The 4,700 is going to be a ceiling for the moment. We look at the market grid, 4,702 is R2, S1 4,651. So we've been down to S1 already. We're probably going to trade back up towards 4684, possibility of seeing 4700. There's some more details I'll go through in a minute on the weekly, but this is set up here to potentially hold this support. You see, interesting enough, PPM2 is actually turning up here, and we're not getting an acceleration on PPM3. So I'm going to draw in a pattern very quickly, because it's really simple after an emotional week to get kind of tied into the emotion of what's going on. But this is more or less, this pattern that we've been locked in here is pretty much a pattern like what we've seen in other periods of time, especially over in this range here, where we start to see just a sideways range come in, and we work this range. It may expand down a little bit, but it looks to me that there's enough here that we're probably going to hold, and I'll show you on the weekly chart. Now so I see just a comment that Gary made about the Omicron news may slow things down. Omicron is the common cold. Let's be real. This is just another reason for certain people to take advantage of us humans. But the bottom line is, this pattern is important to understand. Let's go to the weekly here. So here's 4659. That's that 60 number. That is the 10-week moving average. We look at as far as the weekly goes, 4632, S1, R1 4703. I think there's a possibility of a bit of a rebound, but if we can't get above 4703, I would say by the close of Tuesday, then there could be some more downside, and the extreme downside 4565, but there's three levels that I think you need to watch for as we come into this week, and it's going to be S1 on the weekly 4632, 4592, and then it's interesting that S3 4552 maps out pretty good to the 21-week moving average at 4565. So those are going to be your parameters. Probably not a lot more weakness than that. And I get it that 4565 is another 100 points on the S&P. But let's try to break down something here. I want to continue to spend some time here with this, and there is a couple of things. Back on, I believe it was November 26th, the week of the 26th, we got one of these outside reversal patterns, and you will always hear me talk about this pattern when it comes out. Let me take off for a second the rangefinder, and we had this pattern right here. Yeah, this is the 26th. There's a couple things interesting here, and I'm going to attempt to blow this section up here so we can look at it in detail. So this, right here where I'm highlighting the cursor here, this is the 26th. We got an outside reversal at an all-time new high. The following week, we got a confirmation, but we traded down to the support here at 44.80. The low was 44.85. Next week, got a reversal back in the pattern, and then we hit that 21-week moving average again. We went just through it, got another reversal. Now we're getting, this is where this trading range is really setting up at. So if we started to get the last reversal, the high was 47.33. We actually got up to 48.08. It's hard to believe that just Monday we made an all-time new high, and then we collapsed off of here. So what we're seeing here now, this has got this bar that we're looking at now is today's, so far this week's range. So here's the trade setup, and now I just want to come back up for a minute. And when we get an outside bar, so this is a little more difficult to play. There's more risk in this trade from when it's off of a daily chart or 5-minute or an hourly chart. It's much easier to play. But these events, and I talked about this going back in November, when we get that reversal, especially off a key high or an all-time high, which is called a key reversal, and it's an outside reversal bar at an all-time new high. So here's the deal. We're probably going to retrace back up to those levels. I just took them off the screen, but around 47.02, 47.24. If they get up there on a weekly basis, that's going to be a point where you're going to want to sell the market short. And the problem with this trade on a weekly basis, the stop loss has to be over last week's high, way up there at 40 at an all-time new high, right? So maybe this is easier to play with some options or some strategies like that, where we can do maybe a put spread or something like that. But the point is, this is important because sometimes these reversals they start off as a simple pattern. We get a confirmation, and we did get a confirmation in November, and then the following week we took out the high of the previous bar. So make sure, I always point you to this, but the exact rules for this trade is in the How to Short Apple on the channel. At least when I come to it, there's a section there like how to use things, it's in that category there. You should be able to find that video. But the rules are basically this. If we can print up higher early in the week, you want to sell it. It has to close lower on Friday to confirm the trade. And then whatever the high of this week is the stop for the next for the next week. And I'll talk about this as it unfolds. But I always put this out because this is substantial. The thing that is set up here, I've got the PPMs up here on the board. We're at a minus 0.04, so PPM 1 has rolled over. It's negative, but the next level is 45.65 and 44.19. So probably the ultimate downside objective would be for it to trade down to that level. So as we go through the week, we see what kind of market action we get. I'll be able to get to this and basically be able to talk more about this trade toward the end of the week. So let me put the grid back up here so we can look at what the grid is telling us. So here it is again. I just want to confirm. So on the futures, it is 47.03, and then 47.43 is R2, S1 46.32, then 45.92. So we'll see how this all plays out and whether we can get a lot of downside. I think with Powell speaking, we've got PPI, CPI. I think we're just going to meander around here for a day or two until we get to Wednesdays where CPI comes out, and after we get and see what happens on Powell. So I'm expecting to see some of this stuff just grind out here and stay in these ranges that I just defined. Let's go over and take a quick look at the SPX. Now these patterns that I'm talking about, for the most part, will also be what the Nasdaq and the Russell, all of these are similar patterns as we look across the board here. But we're looking at the SPX for tomorrow. We're looking at the S1 4660, that's about 15 handles lower, and R1 92, R2 4709. This is on a daily basis. Let's look at the weekly. So I didn't bring this up when we were covering the futures, but we did get a cycle hit last week. So with the reversal down, closing lower on the week, printing an all-time new high with the reversal pattern I just discussed, everything's also pointing to a cycle high on, from a viewpoint, this is going to be a cycle high. And so that's why the close on coming Friday, that will be a confirmation that we've at least got a rollover, and one thing can lead to another very quickly, and all of a sudden we have an intermediate high. These PPMs have been in trend maintenance mode going all the way back over here to, let's call it June of 2020. Second mode was hit in August, and then the last was last year, a little bit over a year ago on 12/20 at the end of last year. So all of this action going all the way through 21 has been the trend maintenance mode, and the next phase would be some sort of rollover, but there's still some reasonable support here. It's very sketchy, so we're not going to know as far as this being a big rollover, I think, until the end of the week and what type of price action we get this week. But I do think on those rallies toward R1, S2, especially on a weekly basis, those are going to be places to be taking things out. So as far, and I always look at the world through the vision of wave tech. And so I'm pretty comfortable, like I said, where I'm at, because I know that basically 7 out of 10 stocks right now being 30% long on the daily, 30% long on the intermediate, that most of our trades are, most of our portfolios are in a protection mode that have 40 to 60% plus in cash. So I know we're protected from basically changing the beta of the exposure to the market. So just be careful as you position yourself out there that you're not too overly balanced, and maybe you have your favorite stocks you love, but be careful that you're not over exposing yourself in this market, because we've seen this probably for the last couple months going into December. We've seen this big decline in the percent bullish. So the models have been telling us that the market's narrowing in focus, and this is just kind of confirmation. Now we're starting to see some potential price changes that will confirm that. So let's go to the Nasdaq. And I'm going to go top down. So I'm going to start with weekly here. So look at weekly. Nasdaq's a little bit weaker here. We're below the 21 period moving average, where we're above it on the S&P. And I could show you the S&P spreads. The S&P's been the strongest market. It way outperformed last year on all the other indexes. But the downside potential here on the Nasdaq is down to 15,30,034. So we'll call it 15,000 on the downside. We look at the grid here. We got 15,708 is pretty substantial resistance right now. At PPM 1 on a weekly basis is in trend mode, big time trend mode. 16,046 is the cap, and we can see here 16,160 is R3. I don't expect we'll get there. Probably 708, somewhere between 15,708. We got R1 at 760, and then R2 is 15,960. Now this is weekly. On the downside, we're looking at S1 15,402. And we've been 15,515. So if it takes that out, we're looking at 15,2, and then the possibility of getting down to S3. So there's definitely a weaker tone, and we've seen the Nasdaq lead up and down as far as the market sentiment goes. And with this was all going to be based on, as I go through the 10-year and the interest rate analysis will affect this market more than anything. So let's go to the daily. One of the things that's interesting here, we're getting a potential daily cycle low. So this is going to be important. If we close below the 15,510 level, that will confirm a possibility of lower prices. Fibonacci wise, there's a Fibonacci projection. Let me bring this up so you can see it on the screen. The low target's 15,325, 15,098. So this is also confirming the same level of downside that I talked about a minute ago. And we also have the 200-day moving average coming in right now at 14,930. So, and it's in a pretty decent upslope. So my expectation would be that would be the extreme. And I know that's almost 600 points from where we sit right now, but that's going to be the extreme, I think, on the downside. Okay. Let's go to Russell. Yeah, Russell is so far this is the cash. So we look at expectations for Monday. We're looking at around S2 is 51. Sorry, 2152. S1 2166. That's probably your downside range, probably for the next couple of days. PPMs are in negative mode and in trend mode down, which tells you basically 2237 is the absolute top, but that number is coming down about 10 handles per day. So just in a few days, and 3 days, will be right at 2200 as a major resistance point. There are some really ugly Fibonacci projections down here at the $19.61 is the minimum. I won't mention these others. I think they're out of play. But this is a potential in this pattern. And you know, in the past we've seen that the higher interest rate market was a positive for this market. We're not seeing this time, and I'll cover the 10-year next here in just a minute. But let's go to the weekly chart. Weekly expectations here as far as it goes would be, here's 2156 for S1, S2 2130, and R1 2202. So that's probably going to be a range like an R1 S1, possibility of a R1 S2. It does look like there's enough of a bias on the downside to keep this market from doing much on the upside as far as some giant reversal. Let's go to, that's it. I didn't open up this page, so let me bring up this spread here. Okay. So I'm going to show you this spread here. This is the S&P versus the Nasdaq, and you can see this is also on a daily basis, I believe. Let me go weekly. Yeah, so you can see on the weekly that we've got a pretty good uptrend on this, and it looks like the S&P is going to continue to be the leader here, and that's been something that started going back to April of last year when we saw this spread peak out. So a swing tells you that we're probably going to come back into maybe this 3-4. The spread should do pretty well as far as the between the indices and performance. So that's expected to keep going on. This is your Russell on a daily basis. Weekly, you can see we're just down in the base here. From that standpoint, there's really not a lot of momentum or anything going on in this spread. It looks like the Nasdaq and the Russell for the moment are kind of attached at the hips. They're just not going to be able to get anything going from that standpoint. Okay, I'll come up midstream here. So I'm going to go through. Tonight, I'm not going to cover the Dow. I think it will be interesting as we go through the week after we see some of the market action, but I'm going to cover the interest rates. We'll do interest rates, and then we'll do crude, gold, and then Bitcoin, and we'll call it quits. And like I said, I apologize again for the late start. I apologize to myself the most because I haven't had dinner yet tonight, so it's been a long day. Anyway, so let's go ahead and let's go over to the 10-year. And one of the things that I have been discussing for a while, going back for months, is that I ultimately expected to see the 10-year hit the 200-week moving average. Well, we did that last week. That number is 1.794, the high 1.80. So we were able to hit that. I also talked about this pattern last week that we have objectives, Fibonacci objectives, 1.90, 2.12, and 2.25. And my expectation is you still have a negative 200-week moving average. The market should peak right here. So I think if that happens, maybe we see some stability in the markets. And like I said, I think with Powell coming out on a speech on Tuesday, he's going to be doing his best he can to basically lock this thing down and try to convince everybody that we're not just going vertical to some of these levels I just mentioned. Now, very easily to get to 1.93 and then turn around, but that's another 20 basis points, and I don't see that happening at the moment. But we're looking at PPMs on a weekly. They're accelerating, all three. So we are in big time trend mode up. The support levels are way down at 1.5, 1.55. So there's a lot of space. We did also get an RTX sell signal, and that tells us that we have a potential from that viewpoint, to see some sideways action for the next 2 weeks, which would suggest that we trade back into probably 168. Let me look at the numbers here. S1 173, 168 S2, S3 164. So probably easily an S2. R1 is 181. Maybe we can print up higher maybe on some of these numbers that are coming out on CPI or PPI. Maybe will present itself with a bit of a spike from that viewpoint. The other thing that is going on, and I discussed this in our live trading room on Friday, but we saw a flattening of the 1030, and it's not inverted yet. We're only right now for putting your money out for 30 years versus 10, you're getting 34 basis points is all you're getting out of this. The 530s that are my favorite spread, they're at 0.61. I've argued for a while they should be 0.8, 0.9. They're not, and this next couple weeks here on the spread is going to be very significant. And this is the thing that's going to be the most impactful for the financials, especially with the earnings coming out on some of the banks starting to kick off the earnings season on Friday. These spreads are everything to the banks. And I told you that for many years, I consulted about 36 of the largest banks' proprietary trading room in a service I used to run back in the 90s. And this is big to these folks. This 530 spread is what it's all about. And if this starts to collapse, it's going to really cause some issues with the banks. And as we know, the financials last year, go back to last year was super simple, at least from the viewpoint of trying to determine what sectors to be played in. And I recall, you can go back and watch the videos, but financials and energy was the play last year. And it was one of those two were the strongest sectors of last year, or amongst the strongest sectors. And this year, though, 2022 is going to be much more difficult. I told you before I will come up with some ideas from the standpoint of what sectors are going to be in play, but it's very difficult, especially in the point where we are in the database. So if I just kind of rewind this just for a second, last year at this very moment in time, we had just started to get a lot of sector buys in December. There was a lot of positive rotation happening in the database. So you could kind of see one of the things that our database tells us is when we're in, when we start to get to a certain point, most of the trades that are generated, the buy signals on an intermediate basis, last between 200 and 240 trading days, which is a year. Well, we rotated right into, as we came into December of 2021, we are seeing a lot of those trades and those intermediate models just roll out, and to the point where here we are sitting here after rendering an all-time new high last week. We are still right at we're at 30%. So 70% of all the symbols in our database are neutral to negative right now. And I know a lot of folks, you've looked at maybe some of these numbers, the 200, how many stocks are above their 200 day and all that. And that's a small list as well. And has nothing, it kind of relates to our database in that what we look at is there what intermediate trends are there around that are going to affect the markets. And right now there's not very many. So it's very difficult to kind of come out and make a call on a sector just yet. So I'm not sure when that will come out, but the metrics will start to reveal itself. I'm hoping in the next couple of weeks. And we may, depending on if we get this 3-week trade that I talked to you about a few minutes ago, if we get that to roll over and that it gets confirmed, all of a sudden you have 3-5 weeks down, and now you're starting to set up, you get to that level, now you're coming into the end of the month of January and you're closing lower, maybe getting you'd have an outside reversal bar on a monthly basis, then you have a 3-month trend or a quarterly trend that could start to unfold. And when we get to those levels, if we get there, I will start to talk about that. One of the things that I've noticed, and I won't bring it up tonight because just to discuss it quickly, but all of this stuff that is related from the indexes and what's going on with interest rates, the entire environment is actually telling us that we are at a potential turning point. I'm not ready to join the super bearish camp just yet, but our database is, like I said, 100% prepared for any negativity that happen. This is about as much as it gets. Intermediate might drop down to 22%. I only saw it in 2 times get below the 20 percentile range, and that was in 08 and last year, not last year, but 2020, when we blew out and they shut the economy down, we saw it get down below around 12-14%. So this is about as far as everything goes. So we're from a trending viewpoint on a big scheme, we're neutral. At best, we get into a very broad monthly consolidation range and possibility of seeing some support levels and maybe a potential for a quarterly rollover, which we won't know until the end of March. So there's plenty of work to do before we get to that level. So let's get over and take a real quick look at the, there is one thing I do want to mention before I move on the interest rates. I've talked a fair amount about this 13-week T-bill. We are now at 0.88. I think this is way overdone. I think the Fed will push this down. We actually had a cycle hit a couple of days ago, and I suspect we'll come back in 0.65, even maybe 0.5. That will be interesting, and maybe that will be triggered by Powell speaking. I don't think we get much higher than where we are right now, and so we'll keep that on a watchful eye on that one. So I'm going to just cover the weekly crude oil tonight. Sorry, my voice keeps cracking. I talked a bit about this in the last several weeks. We're seeing ppm starting to turn up. We're just about to go positive on ppm1, minus 0.15. But here's probably the range for the week. Probably looking at a potential of R1. I don't think we get to R2. We could. That would be 80.40 to 82.05. On the downside, S1, 77.41. It's probably going to be the bottom end of the range. This is the weekly crude oil. This is the continuous contract. And what's interesting about this is we do have some upward objectives, 86.70, 96.02, and 101 on an extreme. And this is a new calculation, just came out of this pattern that is set up after trading down all the way down to this 62 handle that we traded back in December. So after releasing all the strategic reserves, they didn't actually release them, they lent them out, which is an interesting scenario. They've never done that before, but it temporarily looks like maybe it influenced prices. But as far as this pattern goes, looks like we're definitely on an uptrend, and we're going to continue to move this much higher as we go through the next several months. So a couple of things that I've been talking about, just real quick to tie everything together. I want to finish this stream up for tonight. But one of the things I've been talking about is some of these inflationary situations have went away. And I noticed lumber is rallying back really big. A bunch of materials are starting to move higher in spite of these higher interest rates. It's pretty interesting here. I don't know. Let me just see here. Let me just see if I still have. Let me just let's go over to TradingView for just a second. What I want to look at here is we're going to go to, I'm going to put in the lumber chart. I just want you to see this because I thought that was interesting. But we had a high of 1733. All of a sudden we got this breakout mode going. The ppms are screaming again on this is a weekly basis, and we're seeing ppms just off the map again at 6.8%, 4.7, and 0.6. So everything's turning up. We're back in the big time intermediate trend level, and we'll see how far to go. But we were at a low at 479. Now we're back at 1227. So there's a substantial move going down here, and this is potentially keeping the inflation higher than we thought. Some other things going out, but this is definitely some issues going on here with the lumber prices again. So right when we thought maybe we were getting relief from some of this craziness, that was the case as well. The one thing that we're not seeing pop back in is the pressures. This is the Baltic Dry Index. Let me go to monthly here. Yeah, this is not going to work here. Hang on. Yeah, so monthly is is just kind of sideways. I'm just trying to get to a better metric here. So Baltic Index, I've looked at some of these others that are out there. The cost of shipping is going down, so we're not seeing the basic pressures there that we're seeing, but there's other places that we are. Let's go back to TradeStation and let's go to gold. Gold has just been a continuation of the pattern that we've been seeing for some time. We're sandwiched in on this range, and I know I cover gold every night, and it gets boring. I still think there's I'm going to show you the monthly. I still believe there's a pretty strong pattern emerging. Looked like we were going to get a breakout finally a couple of weeks ago. We printed up to 1833 and then right back to 1780, and here we are again, 1791 with a 89 low. There is some downward projections right now for a potential of 1766. And then on the upside, that's 1808, 1830 is the big numbers out there. Let's go over to a monthly. And the monthly patterns, we have a little bit of momentum dissipating on the monthly. The key levels, like I said, here they are. 1805, 1835, we printed 33, came right off of that. But the upward slope of this 40 period moving average is very significant. It's up at 0.71. So the extreme downside, quite a ways under here, is 1684. If anything like that were to print, I'm just telling you right now, that's a buy. That's a buy, maybe not of a lifetime, but certainly a buy in this pattern. I don't really see that in play right now. What we're seeing here is just looking at S2, this is monthly. S2 is 1783, basically printed there. S3, 1759. Probably S2 is about as far as this market's going to get on the downside, but it sure looks like there's plenty of upside potential, but we've got a lot of resistance overhead, and this pattern takes months to go on. And I know you folks just met me in the last year, most of you, but I can go back when I was talking about these ranges back in '08. We got this nice rally and the big decline again, and now what we're really seeing here is we went to this large, we'll call it 13 to 2019, we went to this huge consolidation, and now I think we're starting potentially the next stair step where we get projections off of this range here, and we'll see when we start to take a look at some of these patterns, and we're talking months down the road. But whether this is because of inflation or some other disruption, we'll see, but it's still a very positive secular pattern. And those are really tough to deal with, to hold them and to stay with these kind of trades on a long-term basis like that. Okay, final market we're going to do. We'll get out of here now. Bitcoin is trying to find a low, but I tell you, this is the daily, there is a lot of potential downside risk in this market. I've been talking about that for the last week or two, that the downside was key. 44,000 and change, I'll show you that number in a minute, was a key level. We're seeing the good thing to happen here is we're trying to get one of those little bubble formations to set up as far as the daily pattern goes, which suggests we might have a little minor bottom here. We're still trading slightly below the 200 period moving average. That number right now is at 46.20. 46,525. I don't see us getting back above there. There's, like I said, resistance now on this one is 44,796. And the next potential downside is 34,000 to this 28 number. I'll show you the 34,000 number here. So we're trading down at the STX level on the Bitcoin for the week. This chart's going to update here in about an hour and 10 minutes. So unfortunately, Sunday night, I can't get that number to you. It will be updated tomorrow, or if you're a subscriber, you'll see it on tomorrow's market grid. But the bottom line is the key number here from that viewpoint, STX 41,281. So we've 41, low 41,246. So we're printing right down around that level right now, 41,980. It's got a hold here, but the PPMs, this is where the problem comes in. The PPMs, all three of them are in trend mode down. And actually two of them are. PPM 3 is flat, which is the resistance at 47.9, but everything is pointing down from the standpoint of the momentum on this is big. The first number, I talked to you about this before, is 43,730. That's your breakdown point. We're probably going to stay below that. The next target is 34. Then we go over to the daily, so 34 to 28 is a really strong potential on the downside. So I'd be incredibly careful with this as far as the trends go in this market. Okay, folks, finally going to get done here. And I was hoping to be home 20 minutes ago, but that's the way it goes. But yeah, let's look forward to hanging out with you guys tomorrow. Those of you in the live trading room, I'll see you tomorrow. If you are interested in finding out about that, it's Kendall Report/trade. You can find out a little bit more on how to get started with that. And working on some interesting things there as well. So look forward to seeing everybody in the live room tomorrow at 1 o'clock New York time, Eastern time. Until then, we'll see you tomorrow night here on YouTube. Thanks a lot, everyone.